Hey, Steve and Jamie, what's going on?
Hello,
Hello,
traders. Hello, Steve. Hello, Scott.
we hear you.
Welcome to the first webinar of the new year. It feels like it's been months. I hope everybody had great holidays. So here we are back in the real world once again. Today's January 6th, 2020. And I'm your host, Jamie Hodge, and I've got my trusty sidekick, Steve Gomez, in here as well. What's going on, Steve?
Not much. Happy New Year, Monday, the whole bit.
Absolutely. So before we get started here, just something to make the attorneys sleep a little bit better at night. Of course, we're all big boys and girls here, and just want to make sure that everyone in attendance, whether it's this webinar, TA University, or any of the webinars that we host, just make sure you're aware of the fact that we share all of this info with you for educational purposes only. Please do not misconstrue what we share with you as a solicitation to buy or sell stocks or anything for that matter. If you do need investment advice, please seek out a registered investment advisor or someone like a Series 7 licensed stockbroker that can legally dispense, buy, and sell information to you. Okay, I think that'll cut it. Also, always like to take a little time at the top of the hour here to let everybody know the community that we fostered around the TI Pro product. And it all kind of starts off in the upper left-hand corner here, the Traders Room, hosted by Mr. Barry Anderson. Barry opens the doors 30 minutes before every open. It is a great place to learn, whether you're advanced or a new trader. Barry does a fantastic job at showcasing his trading style and the way that he uses the TI technology to get his signals. So, you know, if you've searched around the web and researched trading rooms, you've probably figured out that any of them worth their salt are not free, but that is not the case with ours. So $0 and 0 cents to get in there and try it out. You don't even necessarily have to be a subscriber of Trade Ideas to get in there and see what it's all about. So if you haven't been taking advantage of that resource, by all means, do it. Of course, today is Monday. You get myself and Steve with office hours. Steve's going to take the steering wheel tomorrow for Trade of the Week. Andy Limoff is going to ride shotgun with him. Wednesday is a little bit something off the beaten path with our CEO and founder, MIRKIN, as well as our Chief Technology Officer, Brad Williams. Always a good show with those guys. And then Andy is going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. Friday rolls around, and we like to change it up just a little bit. Big success thus far. We'll probably continue to draw record crowds. The Friday support session kicking off every Friday at 11 a.m. Eastern, and usually going 2 hours, sometimes 3 hours if the crowd is rowdy enough. But it's anything Trade Ideas related. Nothing is off limits. Could be basic configuration, advanced algo trading using Brokerage Plus. So anything that you have questions about TI related, come to the Friday support session and we'll do our best to get you helped out there. The good part about the Friday support session, you don't just have 1, 2, or 3. You typically have myself, Sean, Andy, and Steve in there, all attacking your questions, putting our heads together to get you what you need. In addition to the 5 p.m. Eastern webinars, we have the TI University. I saw a user asking a question about TIU before the webinar began. So here is TI University, and we have 4 of these, Monday through Thursday, 101 through 401. These all kick off at 12 p.m. Eastern, Monday through Thursday, and cover everything from beginning, introduction to trade ideas, all the way to advanced back testing and optimization. So we do recommend that you take these in real time as put on, if you can do so, because you can get your questions answered in a real-time environment there by the instructor. If you have something pesky that gets in the way, like a job, and you can't make the live versions, we have all these recorded and posted up on our YouTube channel. And since the content is static, it stays the same. You can watch them as many times as you would like. If you do have to watch the pre-recorded versions and you do have questions on something that you saw, you can always use the info@trade-ideas.com to send in your questions, and we'll get those answered as soon as possible. Okay, the year is gone. 2019 is in the books, so perhaps in the future we'll see a 2019 bar here. But as you can see here, since we first introduced the original AI Holly 1.0, or what we affectionately refer to as Grail, which we will be talking about because there have been changes to Holly 1.0. We'll talk about that in a little bit. But ever since we brought the first module online, you can see that our user base has expanded, and we would probably expect to see more of the same moving forward. In addition to that, Brokerage Plus, which most of you are probably already aware, it allows you to trade, set up a trading connection with interactive brokers and use our Brokerage Plus interface. And since we've released this thing, live orders and demo orders just keep on going up. Big increase in demo orders since we, made paper trading available through Brokerage Plus. So people are definitely using it. Our demo trades have gone off the chart there, and will probably continue to just increase as the year trudges on. But bottom line, people are liking it, people are using it, demo transactions are going up, as well as live orders filled. So stay tuned, because in the not too distant future, and what I mean by that is hopefully by the end of Q1 here, we'll have another connection to another broker dealer other than Interactive Brokers. And yes, exactly what you might be thinking. One of the zero commission broker dealers. Will that be E-Trade, Ameritrade, or Schwab? Up in the air right now, but hopefully we'll figure that out soon. All right, here we are, today's class. So Steve, it's that time. If you want to take the helm, or I can just kick it on over to you, we can take a look at the markets in general.
Do that myself. Sorry for breathing heavy in there. You'll see what my issue was over here when I bring you the screen.
No problem.
I get so enamored sometimes watching Jeff Mackey and his goofiness that Andy and I were talking this morning about the zombie market, which is the market we have. Why not start off with a little caricature here?
Very Valley-ish.
Yes, very Jeff Mackey-ish. This is my zombie. You can't kill it. You can send a few bullets through it, but it just keeps coming. It just keeps coming. You get what I'm getting here, people? You can throw World War freaking III at this market, and nothing seems to phase it. So there you go. It's a nice little illustration to try and drive home a point that this is the strongest of the strongest bull markets. There's different types of bull markets. There's climbing the wall of worry. I don't even know if you'd call this a wall of worry. The economy is still pretty decent. The only issue out there that people are freaking out for the most part about is geopolitical, but it doesn't matter. We can call it what we want. Geopolitical, these last 2 days have just been tremendously resilient, is the word I'm trying to find for there. Interestingly enough, when you pull back on green candles, that's kind of the point I'm trying to make here. Pulling back on green candles, it's just not what the sellers want to see. They want to see red candles and closing on lows, opening on highs and suckering people in and selling all day and closing on lows. We're not getting that. We're getting overnight spooked markets that gap the market down. And the zombie market that it is, the buyers show up and say, nothing's killed this market yet. Why am I going to consider that this is the one that's going to do it? Let's just keep the party going. So the point is, the party is continually going. Try and sell the market off. If they can't, the buyers just pop right back in. Thus, the zombie market analogy. You can throw everything but the kitchen sink. You can shoot it with AR-15s and holes and shotguns. Nothing is going to stop it. It's going to keep moving forward until it doesn't. And so we're not going to try and pick a moment. We're not going to try and look at a geopolitical or a fundamental event that's going to draw a halt to this incredible bull market. Price action is all we really care about. So looking at that, I just kind of drew that little orange line there. Once again, what do we got? Prior resistance, 3 days in a row there, becomes future support. So there's our line in the sand here that we just kind of drew together at, we'll just call it 320 and a quarter or so. That's where the buyers seem to be holding the line in the SPY. So let's just forget about what we're seeing in the news or reading in the news. It doesn't matter. The buyers are really excited. And speaking of, the Qs are the ones that led us higher last year. If you look at the end of year numbers, the Q, the NASDAQ was the big winner. On in there, it just felt like that was the pick. But I'll explain that tomorrow. For the moment, we're here to talk about market action, and I was on the NASDAQ, but now I've gotten locked up again. It happens a lot when I do the webinars here. We'll just wait with awkward silence. Here we go.
That's a lot of Qs.
That's what happens when it locks up. It all buffers. So Qs definitely leading the way. A little observation there. Hey, look at how about that? Just not to get too nitpicky, but there's our line in the sand there. Prior resistance. Where did my? There we go. Prior resistance back here became not only a gap fill but support. So really a solid lower level candle there in the NASDAQ today, which brings me to, boy, I've been shouting this thing a long time. I've rebalanced my 401k. The IWM had a bit more of a rough go at it compared to real quickly the SPYs above all moving averages, the Qs above all current moving averages, and then we get to that Russell 2000 above the 20, but below a flattening, curling over 10. I'd really like to see this thing lead the way, especially in light of everything I've talked about, all the possible value that could be there to respective all-time highs that we've talked about. The NASDAQ and the S&P are breaking through, or have broken through their all-time highs. This thing has a lot of catch-up to do, but we need the money managers to kind of catch the same vibe that I've been talking about and put their money to work. Maybe that was the head fake before the big move, but I would hope for bigger, better things for the IWM this year. We'll see. Maybe it's going to keep playing the same old tune, and if it does, then we have to pay attention to that. For some reason, they're not in favor. One of those reasons could be, Amazon, Facebook, Google, Apple. Those are all the ones that people want to own, and they just keep getting bigger and more mighty by the day. So maybe that title term, maybe some smart money managers will try to put the money to work in the Russell 2000, but we'll see. JC Peretz put out a really nice Dow chart. I think it was more of a weekly or maybe even a monthly. Let's look at the monthly. That's pretty much what he did. He just said, I think this Dow has resolved itself higher. We've got 2 or 3 months now of closing higher prices, or at least 2 months of closing higher prices. JC's calling for another measured move higher in the Dow Industrial. So this, again, I've said it before, there's no bear case really to be made here, especially when we look at the individual candles as they relate to what's happening in the news. Price action tells us it's extremely strong. It's like holding a balloon underwater or a ball full of air underwater and then just releasing it. Every time you release it, it just finds its natural homeostasis and pops right back up. That's the zombie market. You can't kill it until we find a way to kill it. And that's all I've really got, Jamie.
Well, thank you very much, Steve. Choice as always. Grab it back from here. All right, you should have eyes back on my screen now.
Yep.
So yeah, holidays are behind us. Thank goodness. Gap down in the fill. Okay, so let's move on to expectations here. As you regular attendees are already familiar, I like to use my compare count windows to kind of give me a little idea of what the market might be up to for the rest of the session. And this morning, results were a little bit lackluster. And what do I mean by lackluster? I mean, after the first 15 minutes, this is the bias that we had right here, 53% green, 47% red. So yes, a positive bias, but under 55%, which typically means, well, get ready because, shorts might make money, longs might make money, but, bottom line is it's not going to be easy. Not that trading is ever easy. I used a colorful analogy this morning, as Steve will probably remember. The analogy I'll use now is, I said, well, with the stop losses and the intraday movement, probably going to be like a seesaw with razor blades on it. Of course, I used a more colorful analogy between myself and Steve, but not
Please
really.
don't repeat the analogy that I used.
Not really proper for prime time here. But the bottom line is that, I was like, okay, well, let's see what happens. But, checking out what the SPY did, I got to say, I was wrong on the action. I didn't really expect to come up here and fill the gap and then push higher by the close. But that's what happened. Now, I was right on another thing, and that was, man, if you're using stop losses, which most of us have to do on single positions to manage risk, it was kind of a tough day, and we'll get into that in just a moment here. But once the momentum kicked in, a lot of the things that got stopped out turned and burned the other way and ended up quite profitable, and we've all been there and done that before, which leads us to Holly and how she did today. They, since there's 3 of them now, we'll just call it the AI moving forward. How about that? But the 1.0 module has been retooled, all right? And for those of you that have been keeping up for a while now, you saw a big change in NEO not too long ago. And if we direct our attention over here to the channel bar, you can see NEO only kicked out 4 trades today. Holly 1.0 or 1.0 AI, I don't think I'll ever stop saying Holly until it's not on there, only kicked out 2 trades, and we can see 2.0 had 14 trades and was the winner for the day. So thank you, 2.0. But 1.0 has been retooled. So there are some similarities between it and NEO, and then some differences, and I'm going to take the time to point those out real quick here. So I think, and correct me if I'm wrong, Steve, the 1.0 module has been online for about a week now. Maybe last week was its debut, whereas NEO's been, the retooled NEO's been online for quite some time now and posting some pretty spectacular performance. And while we're on that topic, let me just pull this back over here because I did snap a couple of screenshots of NEO, all right? Performance going all the way back to, well, since inception, all right? So, of course, we don't call it risk on and risk off anymore. We call it aggressive, moderate, and conservative risk, but we haven't updated the back office chart yet for the performance tracking yet. So more aggressive mode for NEO, we can see well above, look how big the gap is between the S&P and NEO's performance. The more conservative, you can see back and forth one more time, risk on, risk off, a little bit narrow, a little bit more narrow of a gap here, but really a big difference when it first came online, as you can see here. So the bottom line is NEO has been performing really well in both risk modes, risk off and risk on, but today had a little bit of trouble, okay? So for those of you who remember the old NEO, well, the big difference between the new NEO is that a lot less trades, and NEO is looking for stocks trading extremely high volume on the relative scale. So if you take a peek at this NEO play today, EPC, 1.36, not the biggest. Let's resort here. 3.68. And of course, these are all getting a little bit smaller. Now, here we go with Calm, kicking out relative volume of 20. When I say these are getting a little bit smaller, they really are going to ramp up when earnings season kicks in. But in the regular, in between earnings, we're still going to have some stocks doing some big volume, just not near as many. So just to recap here, NEO is now looking for an all-day hold. Risk is going to be a little bit larger because we're typically looking for high or low of the day as a risk, depending on whether it's short or long. And NEO only has 4 algos that it uses. So if I come down here and just say show me NEO only, you're going to see the same 4 algos appear on NEO each and every day. Now, about the newly retooled Holly 1.0 up here. Holly 1.0 is going to be looking for an all-day hold now as well. Higher relative volume stocks, but not quite as high as the parameters that NEO is looking for. And then the main difference is Holly 1.0 isn't going to just have 4 strategies like NEO, it's going to have access to the full strategy bank, just like the previous version had, okay? But the main changes are that you'll probably see less trades, higher relative volume, and these are designed for an all-day hold versus a 15 or versus a, say, a 60-minute intraday hold time or a 90-minute or a 30-minute, okay? So kicked it off with a bang last week, down a little bit today, down 41 bucks, assuming we're trading 100 shares per trade. That's what these totals over here are still reflecting. But the really eye-opening numbers, which the panel bar will be reflecting soon, hopefully, is I'm going to put my strategy panel back on all. And before we take a look at these numbers, I'm just going to show everybody what I have my risk set to. You can see here on the AI trades, we're risking 100 bucks per trade, and then the system is getting in to as many shares as that will accommodate. So now we're showing all the modules here, and let's do this. Conservative, okay. So going back to what I said earlier, and we can confirm this on the blotter. I'll just have to stretch it out a little bit here so we can see everything. We usually don't see near as many stop outs as we did today. What we have, 1, 2, 3, 4, 5, 6. 6 out of 20 trades got stopped out today. All right, that's a little bit more than we normally see. But today, based on the gap down, and the SPY from an aerial view here, it looks like it just went straight up. But the longs didn't really cooperate as far as the stop losses were concerned today. So if you were sticking to your stop losses or going in conservative mode, which that's what that is, you get stopped out, boom, you took a hit today to the tune of about 300 bucks, risking 100 bucks per share. Accept a little bit more risk and go moderate profit, which is stop losses are getting hit, but we're holding into the close, versus conservative, where we're adhering to the time stops that you can see right here in this column. Well, we'll call it a scratch, down 24 bucks. And of course, all of these numbers do not include any slippage that you would have taken. But since this is a statistical model and we had 20 trades today, if you're a purist and you're just going to say, you know what, I'm not going to use any stop losses, therefore I will escape the stops that eventually turn and go. Of course, there's always something in the back of everybody's mind that goes, well, I have to use stop losses because, well, something could just go crazy. I could lose a huge amount of money, right? Well, think about that for a while moving forward when you're interacting with the AI. Track the results, because check this out. Aggressive, which means we're just taking all the trades, we're letting them go until the end of the day. Well, big difference what we see here versus the cumulative effect of what we're seeing over here. All right, so just letting everything do what it does and close them out at the end of the day on $100 per risk, we're at 400 and change here. Now, of course, that does not include slippage. So on 20 trades, let's just say we factor in a dime for slippage. That'd be about 200 bucks. So there's still something left over with 10 cents of slippage per trade, which is a pretty good estimate, okay? 10 cents meaning let's account for 5 cents on the entry, 5 cents on the exit, whichever way you want to justify that, but just 10 cents per trade total on the in and the out, and that's what we are left with. So this is a very good example of a statistical model in play. Saw this a lot back when I was heavy into algorithmic trading, using stop losses versus not using stop losses, and this validates that pretty well right here. All right, so just wanted to take a moment there to let everybody know the differences between 1.0 and the old model. If you have any other questions, by all means, just put them in the questions panel there. So as we can see here, barely a bias of long. There were a fair number of short trades today, but once again, if I sort by trade direction here, okay, there we go. A lot of red here. Shorts were not working today. Longs weren't working in the beginning. had a lot of stop outs, but then they caught, okay? So a lot of people, you know, there's always somebody out there beating the down drum, right? Correction is imminent, blah, blah, blah. But as Steve was illustrating in JC's charts, you know, that's really not what the charts are telling us as of late. So on top of that, you know, that doesn't, you know, of course we can have quick downturns, 1 day, 2 day downturns, but 1, 2, 3, 4, 5, 6, 7 shorts today, and none of them really did too well. We had a little bit of profit in MBOT. So how should we treat this information? Well, as Steve was talking about the zombie market earlier, a nice little assortment of shorts today. They didn't really perform at all. So how can we make use of that information moving forward? Well, for the rest of the week, based on the other charts and the shorts not performing well today, you know, I'd probably have more of a long inclination tomorrow. Of course, I'll watch my normal metrics, try to set my expectations like normal, but right now it's looking more than likely like more long action moving forward. All right, sorry about this, guys. I keep losing my spot here. There we go. Okay, moving right along here, shorts, as we just talked about, not performing very well. Conservative, moderate spread, which we used to call risk on, risk off spread. All right, so let's take a look at some of the ones where a little bit of that spread existed today. I just sorted by aggressive profit, and we can see here a little bit of juice in between the D-dog there, but nothing really to write home about. As we can see from the shaded area, this is where the AI closed the trade. We would have had to sit a little bit of wiggle, wait for this 10-period SMA to get tested here before we pushed a little bit higher. Don't really know if that would have been worth it on that one to sit that little wiggle, but it did finish higher than where the AI got out, but not by much. One that sticks out like a sore thumb here is this XEC trade. Now, a lot of the times we'll see Holly close a trade out on a profit save or a reduced risk. And we can size up that chart and go, you know what, this looks really strong. I'm going to ignore the AI's exit signal and stay in it and hopefully make more money than the AI did in conservative mode. And then sometimes we can use a profit save or reduced risk as an entry signal. If the stock hasn't moved a whole lot from the entry point, but it's going sideways, we talk about that a lot. But on situations like this, we can also sometimes use a stop hit as a good level to watch and potentially make an entry from. So XE is a good example of that today. So the AI calls the buy right here at 53.91. 1, 2, 3 minutes later, we're getting stopped out. But check it out. We wick down to that stop area, then we go right back to it. Kind of goes sideways, hugging that stop area right there for the next 15 minutes, then bounces right off of it. So once again, I always harp on the fact, well, yeah, the initial signal for the AI is a lot of the time, sometimes good, just to jump on it right then and there. But we all know trades don't just go our way immediately all the time. It's always nice when they do and we're in it. But a lot of the times there's second and third opportunities when the AI is calling an exit signal, and a stop hit is no exception. So, of course, I'm not saying just blindly take all stop hits, but focus on the action. A wick below and then some sideways action there. So you could think to yourself, well, hey, I could use that wick as my stop loss, like so. This thing's just let's see, the bottom there is what, 53.33. We're up at 53.48 there. We'll just call that 17 cents and round it up. So you can take a 17-cent risk and get a much better price than the AI, and then we can see what happened there. This one even firms up and gives you a secondary pattern coming up here, so that if you did take that off that wick right there and felt comfortable that that might have been the bottom, which is what that wick is good for, later on the day, we have another signal here as it breaks that range and kicks it on up to the highs before it peels off a little bit in the last 30 minutes there. All while doing not extraordinary volume, but at least above average on the relative scale. Which, by the way, not to change topics too fast here, but as I told you guys earlier, we had the gap down. I was also surprised to see the gap fill and then push higher. and look at the relative volume on SPY, just a smidge above normal. So can't necessarily say this was a light volume gap fill. It was a normal volume gap fill, which is just the next best thing under high volume.
It's a good question from Glenn if you were looking for
I use the best of conservative and moderate. Can you explain what that is? Sure. Okay. So as you can see from the columns up here, we got conservative profit, we've got moderate profit, and then the third category is aggressive. Okay. So conservative is the AI adhering to its rule set. So if we look at the rule sets down here for each and every strategy, for example, tailwind is set up for a 120-minute hold time, 2-hour hold time. It's got a smart stop in effect. So that is conservative mode. If the stop gets hit, trade is closed, right? Obeying the rule set, just like you would obey your rule set, stop losses, profit targets, timed holds, all that good stuff. Now, on the moderate profit, this is what we used to call risk on. So if a stop gets hit, trade is closed, but the system will continue to track the progress on a reduced risk or profit save, right? And then aggressive is not using any risk parameters.
Get aggressive.
It's just putting the trade on and then seeing how it ends up. There's no profit target, there's no stop loss, there's no timed hold, or any of that stuff.
But to qualify his question, I think he's using the best of, as he said. So it starts off in the morning. He's letting the AI, the Brokerage Plus rather, pick when he selects the best of. How's that different than selecting? Yeah, I kind of wanted to make sure you're going there. So that's his question.
Yeah. Okay. Not necessarily the difference between, but what dictates what mode it will use. Okay. All right. I got you now. Okay. So if we direct our attention once again over here to the AI modules on the channel bar, all right, we can see how these all finished. And it's whichever mode is yielding the highest return is going to be the mode that would be in effect at that specific time. So you could have the scenario where, okay, you know what, I guess I should just bring my Brokerage Plus module over here for an illustration. Stand by. Okay. We have Brokerage Plus, and just to give everybody an idea of what he's talking about here, when we go into the trade instructions, we can pick best of conservative or moderate, okay? Whichever one is showing the best total at that time is whichever one will be used. So there is a chance that a strategy or a module could be in conservative mode because it's doing the best, but then all of a sudden, moderate takes the lead. Okay, so the next trade would be initiated in moderate risk. Okay, so it can flop back and forth depending on which one has the best total at that point in time. So Glenn, let me know if that makes sense or if I need to try to explain it in more detail. But it can change depending on, because these will change as well. Aggressive could be leading, but then something gets out of whack, and then the next one down with the second best performance might be moderate. It would switch to moderate. Okay, cool. He says you got it. Cool. Yeah, thanks for pointing that out, Steve. I was just on a different tangent there. Okay, let's check out another one here. Okay, so conservative here, we've got a $22 loss, and in moderate profit, we would have made 122 bucks. Why did the AI get out? Profit save. All right, so let's take a look at PTCT here. Okay. Yep, there it is. All right. All right, from the tailwind strategy, PTCT, we get a buy signal right here, 49.05. As soon as we get the buy signal, the next 15-minute candle, we're setting a little bit of a drawdown here, down to 48.89. So it's at a whopping 16 cent drawdown. No big deal. Not to me, not to most people. A lot of the times we do get a little bit of red and have to sit the red before we can enjoy the green. That was the case with this one. Nowhere near the hard stop. Now, everybody just keep in mind, that's what a hard stop is for. But why did the AI close the trade out? because it wasn't really moving in the direction that it was intended over the next 30 minutes after the signal was generated. And to kind of put it into easy to understand terms, it's not exactly a trailing stop, but it's kind of like a trailing stop, the AI logic on allowing it to exit a trade prematurely. Profit save or reduce risk are those two audibles that it can call. And it's typically when a trade is just sitting there, not heading in the direction that it's supposed to. Now, that's not to say that it might just be flat, but the longer time passes and the trade isn't heading in the direction that it's supposed to, well, then the AI can call reduce risk or profit save, okay? And that's what it did on PTCT. But all we had to do is wait it out a little bit, get a little bit more sideways action, and then the thing catches and eventually becomes profitable. So we can see here, profit save, conservative mode, a loser. Hey, how many times have you done that? I've done it thousands of times over my trading career. You just get tired of waiting. You're like, the longer I stay in this thing, the longer it makes me feel like it's not going to work. I can just go ahead and take a small loss here and not eat my whole stop loss. You punch out of the trade to make yourself feel better. Next thing you know, you could have made some good money on it. We've all been there. We've all done that. And the AI is no exception. Just to reiterate here, the real power of the AI are the statistically weighted entries, not necessarily the exit signals, but the exit signals can be very valuable, a lot of the times used as entry signals. All right, another question. Okay.
Peter wants to know, why can't we go to aggressive mode? First off, like we said earlier, we almost like said, forget it, because it's basically ignoring the stops. But there's no setting for aggressive mode, and the reason there is we just want to make that idiot proof. We just don't want people to wonder, well, why didn't the stock stop out? Well, you had it set to aggressive mode. Well, why is that even an option? I don't want that. So we erred on the side of caution, Peter, but what maybe Jamie can show you is there's an option called re-entry, which allows you to get the best of both worlds. You can still stop out, but if you have the re-entry button checked, it'll get you back in the trade at an interesting point.
That is true. Okay, so as you can see here, all you have to do is right click and say edit re-enter long or short, in this case long. So if you get stopped out and the thing goes back through the entry line again, it'll get you back in. Okay, so that is one workaround. As Steve pointed out, we don't want to just make aggressive available in that format for obvious reasons. But think about this. If you do really want to embrace aggressive, which is the equivalent of triple black diamond in the ski world, I mean, black diamond's hard enough. Triple black diamond, woo, you better be skilled, okay? And that's kind of our thinking on this. If you really don't want your stops, as soon as the AI makes an entry for you, all you got to do is cancel the stop, okay? So that's how you can mimic aggressive if that's what you want to do, but you have to consciously be aware of that and go and just cancel those stops and that is your workaround.
We don't want people that want to turn on the machine, grab their coffee, and go to a day job, and then wonder why their account blew up when they got home. We're just trying to protect people from that.
Yes, we always, hey, turning it on, going to the gym, coming back, as long as nothing messes up, everybody's hunky-dory, okay? But a lot of the times, things happen. You might drop your connection to Interactive Brokers, right? Might not necessarily be a TI issue. So we always recommend, yeah, you can run it in auto mode, but it's always a good idea to be sitting there and babysitting, everything. Now, some people still make the choice to leave it, and that's your choice. That's your risk preference, okay? But as far as the way we try to educate people on the AI, this is the protocol. Better safe than sorry. Okie dokie there. All right. So once again, PTCT, if we were just been a little bit patient, not coming anywhere near our stop loss, we would have been rewarded and made more money heading into the close to the tune of, what's that, about 6 times what we would have lost, we would have made here. Let's take a look at a little short here. Okay, this is just, well, I really like the action that happened here. But just like anybody else, when you see these wicks right here, can make it a little nerve-wracking, even though that's only, let's see, 1225 down to 1180. Yeah, on a percentage basis, that's some kind of reminds me of some algo action there. But the bottom line is this: once again, MBOT profit save, which was actually a small loser. Probably by the time it closed it out, it was maybe in the money a buck or so, but by the time the AI closed it out, it was actually a $5 loser. Okay, once again, profit save, because we get in here, we just go sideways, we're just hugging the entry line for 15 minutes after the trade, and then we're below it 30 minutes in, right? So once again, ignoring Holly's exit signal on this one, pretty conducive. Or using this as an entry signal right here. We could have done that. We could have used this, we could have used her profit save exit as a good entry signal here and still made some good money. So once again, this one coming nowhere near the hard stop here. All we had to do is obey our rule set, sit tight, and then just get this slow little grind down the entire session, make some decent short money. What I will point out is the 10-period moving average here keeps it nice and tapped down once we get through there. Came down here, initially tested it and stayed below it. And then as we got a little bit of traction, probably some short or people that might have been short covering their positions, we popped back above, but wouldn't have been any worse off holding this one into the close, maybe give up a few pennies there between 1174 and 1169 there. But all in all, a very solid signal. Just Holly getting bored and pulling the plug too early, leaving a nice spread between conservative and moderate profit there. And the name of the game is just capturing some of that. If you get it all, fantastic. But big difference between negative $5 and positive $91 there. And that's about it as far as spread between conservative and this is pretty big. I don't know. This one might be worth looking at here. VAL. Once again, reduce risk, but check it out. We got the entry signal up here. This one came the closest out of any that we've looked at to grabbing the hard stop there, but it did not happen. All right. So just sticking to your hard stop on this one, you had to sit a little bit of pain, but in the end, it would have ended up being a good trade. A lot of charts just like this as the S&P finally kicked into gear. Well, once again, the S&P was always in gear. It's just that a lot of these things were visiting their stop levels before they decided to join the party there. So all in all, not the best day for the AI unless you were taking aggressive stance on risk there. But tomorrow's a brand new day. And of course, hey, it's kind of like Murphy's Law. Everybody's back, ready to go. First full week since the holidays had kicked in. You know, me and the boys were hypothesizing early on in the week, last week. We're like, you know, Thursday might be a big down day. Friday might be a big down day. And of course, they throw the curveball with a nice little gap this morning. But full recovery and looking like nothing's really wrong here. 2 gap down days in a row, I might add. Prior trading session gap, not quite a fill, and then we got the gap and fill today. So all things point to northern exposure. We'll see what happens tomorrow. All right, and lastly here, continuing to track AI calls and markup and alert up. And what I mean by that is, you know, don't think for a moment that once all of these trades are produced on an intraday basis that that's all they're good for, okay? Because there can be a lot of good things brought to your attention by simply going over each one of these, say on the daily, at the end of the day, and seeing what looks good to you on a daily perspective, okay? Sean McLaughlin is already doing this, and you can follow Sean, Chicago Sean. You can see this was his tweet from today. He added PG&Y and DDOG. Those are 2 of the signals that were from today, and he's going to watch those long term. So for example, PG&Y, and I was looking at this earlier, this is a relatively new stock. This is the entire trading history on the daily. So we got a nice little doji today, looking strong, not too far away from an all-time high. How many days might it take to get there if it does? I don't know. But once it busts out, it might be interesting, right? So if you didn't want to forget about this one, all you'd have to do is take the high of that candle right there and go, man, you know, whether maybe I don't even want to bother until it breaks out here. So we just set a price alert, okay? 32 bucks is the high. Right click, 3201. Reference of Holly 2.0. Save that. Might not be tomorrow, the next day, maybe it's Friday, who knows? But if you do that, you'll get alerted when that thing does tick, and if it looks good on the intraday and the risk is acceptable, that's something that you otherwise would have forgotten about. So here's what I would recommend if you have not been doing this, which probably most of you have not, maybe some have, is accessing the AI's history. And you can do this for the entire AI, or you can do it for your favorite module, okay? So let's just say it was Neo, right? Good old Neo only comes to the party each and every day with its 4 standard strategies. So we'd come up here to the trade blotter, and we would also say, just show me Neo. And then we can go back as far as we want and start examining all of these for a longer term perspective, setting our price alerts. What I did earlier is, I believe I used, let's see, what was it, December 9th. Yeah, all right, good, they're still in there. January 3rd through December 9th, and just checking out all the trades that had come through there. And I just sorted by aggressive profit, but the support is really insignificant. Bottom line is, you just go through each and every chart and you see if it looks interesting on the daily. All right. And I took the opportunity of setting some price alerts today. And of course, everybody's going to have different preferences, right? For Francesca's holdings, you know, kind of an interesting area right here. If we break out of this little area right here, we might want to take a trip on down to this wick. And if we punch through there, we got a nice gap to deal with there. However, notice I've made 2 price alerts here. If it breaks out of this little channel to the downside, or if it breaks out to the upside, little envelope action. So you can see right here, I've got 2 different Fran alerts from above or from below. So moving forward, if any of these things that looked interesting that the AI has brought to my attention, if it happens, well, you're going to see that status change from working to trigger. It's going to flash. I'm going to pull it up and go, hey, all right, previous AI play, and I'm going to take advantage of it. So you can envelope a lot of these things, or you can just set short or long alerts. Some of these things that are like $1.50, yeah, $1.50 on SBPH, okay? It's also pharmaceutical stock, a little bit more than the rest. So setting a downside alert on $1.50 stock, and it'd be $1.22 by the time I got there, probably not the best use of time, because even if it did get there, chances are you probably could not find a borrow for it to short it. You wouldn't be able to put the trade on anyway. On the other token, if it comes up here and gets above that prior wick there from 1, 2, 3, 4 days ago, you got a little bit of room in that candle. It might want to make up some ground, okay? So very productive habit to get into. Go back as far as you want to start the party, and then every day make it part of your trading routine. Go through each and every symbol like Sean does, pick out the ones that look the juiciest to you, set those price alerts, and that way you can leverage the AI moving forward for swing trading. On the topic of swing trading, since Neo's been redone, Holly AI has been redone, so hopefully we're going to see a lot better performance out of those 2 on a lower trade count. But in the future, what I'm being told is that Holly 2.0 will be retooled for swing trading, okay? And that would kind of round it out for us, have a real-time swing trading blotter for Holly as well. So a lot of good things coming down the pipeline in 2020. I still have to kick myself and remind myself, yep, it's no longer 2019, 2020 is upon us, and it should be a very productive year for TI and TI users. All right, Chris, let me just check out your question here. On the paper side, yep. And that's a good thing to get into, is before you launch anything, whether it's your strategy that you've come up with in an automated fashion or whether it's Holly, keep in mind you can do all that through paper mode now. Okay, you can load your algorithms up or just turn Holly on, activate all the strategies, and watch in real time as the signals are triggered, and then they'll show up on your B+ plotter. All right, we are at the end of the hour here. So I want to thank everybody for attending. Thanks for coming by and hearing what we have to say. Scott, if you're ready to tell everybody how they can save a little bit of money with a code, we're ready for you to walk us on out.
Alrighty, there's my mute button. Yeah, a couple items on the way out. We've got a series of ebooks that have been very popular. Just go to trade-ideas.com/setup to get them. They're free. Both Jamie and Steve contributed chapters. There's 3 books, each organized by topic, and there's cloud links so you can add to your layout in there as well. We got a podcast. We'll probably start up the new year pretty soon, so get ready for that by searching for Trade Ideas Podcast wherever you listen to your pods, and add us as a subscription. Check out some of the back issues with interviews. It's all good stuff. Promo code this month, kickoff, all caps, saves 15% off your first month or year of Trade Ideas. Also use it to upgrade from standard to premium. Just go log into your account management section of the website and apply the code to the change your subscription page, and save 15% off the first month or year. Any questions, send us an email, info@trade-ideas.com. That goes into our help desk software. That's the best place to send all your questions. You can follow Jamie on Twitter @QuantBot. Steve Gomez is @TodayTrader. Facebook.com/TradeIdeasPro is the Facebook page to like and share what we post with your friends. Thanks, everyone. Thanks, Jamie. Thanks, Steve. We'll get the recording of this up a little bit later on. You get an email reminder tomorrow about how to find it.
Thanks, everybody, for popping in. Good luck tomorrow. Bye-bye.